Gene, you heard Steve's report. I also kind of hearken back to what he kind of just said about whether or not tech spending is still there from Jim Cramer. I seem to recall an Apple analyst at Goldman Sachs coming out this past week saying that they have to now price in certain parts of a recession possibility and that they have to lower their target price. So is the worst over for tech?
Simply put, I think it is. And we've been more than 50% in cash for more than a year. It was a difficult position to be in late last year. It's been a better position to be in this year. But I just add some context to, we have not been saying that tech has bottomed. I am beginning to say that. The bottom is not a single point. It is a forming of a bottom. And I think we're in the early stages of that. In particular, I think we've seen some positive signs regarding Micron, for example, guiding down by 20% last week, stock closing down 3%. And I think you see this hot jobs number today. The expectation is that rates are going to be going up, and yet the market hangs in there. And so I think this is encouraging for big tech. And I would just kind of point to this, is that at the end of the day, for the June quarter, when commentary comes out from all the big tech companies about September, I would be bracing yourself for bad news. I think that the smart money would say that the commentary is going to be negative about September. I believe most, but not all of that is priced in. And so to kind of finish out the thought, Dom, is I think we're going to hit a bottom probably after this earnings season. And part of it is not just because the commentary, I think, resets a bar, but more importantly, the market looks 6 months forward. So the market's mentality, especially with big tech, is already in early 2023. And I suspect that some of these revisions, downward revisions to numbers that we're going to see in the next few weeks sets up for an easier bar in 2023. So as you kind of play this forward, think about the bottom forming over the next couple months. And I think 2023 is going to be a great year for tech. I was not saying that a year ago about 2022.
So if 2023 is going to be a great year, Gene, what's the big deal about September and what companies are likely to say and what you think we're likely to hear?
Well, the important part is just resetting that bar. And I think that what investors want is for companies to exceed expectations. They don't want surprises. So the theory is that the September quarter is, I think, the first true reset quarter. We've looked at the commentary from companies after they reported, or when they reported their March quarter, the commentary about the June quarter. And we looked at 20 of the top tech companies, and of those, 6 had negative commentary about June. There was some commentary, other ones that had some commentary about Eastern Europe, but as far as the macro, it was 6. I think it's going to be more like 12 or 20 will have some negative commentary. But Kelly, just to answer your question, is that I see that as kind of a changing moment here. It allows investors, tech investors in particular, just to take a deep breath and say, yes, we've been waiting for these cuts. Now the cuts have happened. And now we can start even more fully embracing what should be easier comps in 2023.
Shepard Smith here. Thanks for watching CNBC on YouTube.